Good morning, good evening from whatever time you're watching from. Uh-huh. This is basically a weekly outlook. Today is the 31st of September. Tomorrow you're starting a new month. Tomorrow you're starting a new month of September. Today is the 31st of August. If you look to your left, you'll see the charts, the monthly chart. This is the monthly chart, the 1 month chart. And on the 1 month chart, you can see this is the June's candle. July candle closes above the June's candle, which creates an order block. And then August candle trades inside the July candle, sorry, which was the up close candle. So this makes like an order block. And I want you to look at the candles. See, this is June's candle. Look at the low of July. Takes out the low of June, then comes closest above the low. So that is what I expect here. And if you see like August candle, it also took July's previous monthly highs, impulse, then closes here, which is like around, if we take a ruler and we measure the body of the order block, like that, you can see we closed just below the consequent encroachment on the monthly, right? Yeah, we can see that. So what I expect for the September candle is the September candle will open at around 978, 97, 855, make a low below 97, make a low below 97, 556, 97, 556, make a low below this low, taking out the previous monthly lows before coming and we target this previous monthly highs. Yeah, that is really like my whole outlook. Because we can see where the order block forms. It forms just along this imbalance here. So that is where price is forming. So let me just go to the weekly. The weekly of man marked this out perfectly. So this is where the monthly order block is at, where we closed above. This is July. And then this is August. So if we zoom in here in August, you can be able to see a couple of things. This is last week. That is last week from date. No, I mean, yeah, this is last week from date 18, 21st, 31. Yeah, this is that. Okay. No, I'm getting a little bit confused here because of the bar pattern. Oh, yeah. So this is last week. What can we see from this previous weekly candle? You see, last week, the previous week before last week, we had taken the previous weekly low and closed above it. But we rejected. We're not necessarily looking at the wicks of the candle. You're looking at the body of the candle. So you see, took out the previous weekly low with the wick closed below it, which means it failed the strength to take it lower. Now last week, where I was buying the dollars, the dollar crosses, you can see price tried to go up during the early part of the week, and then it was pushed down very rapidly, meaning it's rejecting these zones, right? But if you also look at it very clearly, what is it creating? It's creating a low liquidity resistance. So going off from this premise of previously weekly low taken closed above, what do we want to target? We always want to target the previous weekly highs. These are the previous weekly highs. See, previous weekly highs of this candle. This weekly range from week to week, the week is taken out, price goes back in. So expect price to creep back to these zones. And knowing that this week we have NFP, I will be looking to trade on Mondays. So Mondays will be probably tradable. So if I'm looking to trade on Monday, I have a couple of things. First of all, I have this. So on the daily, you can see I have clearly marked where August monthly lows will are. Oh no. So those are August monthly lows. This is where I expect price to take out this liquidity. After taking out this liquidity, so I'm expecting price to come take out this liquidity, close above previous monthly lows, and go up like that. But it can come directly like this, or it can go up first, manipulate, take the previous daily highs, back into this rejection week here, which is forming off. If Let me just hide that. If I hide that, you can see that there is a clear daily order block there. So price closed above it and then went back to it. Now that is what I was trying to replay. So if we put price here and we watch the reaction of price trading into that order block, which was this last week of August, the trading, the buys that we were taking, you can see this candle. So you see the way it rejected the order block and closed. This is the Wednesday's candle. Rejected the order block and formed the low of the week, the high of the week, sorry. So this is previous weekly highs, right? After forming the high of the week there, this is Monday, formed high of the week on the Wednesday. Tuesdays accumulates, Wednesday forms the high of the week. Thursday, Friday forms the low of the week. See? Forms, but while it's forming the low of the week, remember, it takes out Thursday's what? High and closes neatly below it. Knowing that there's this order block here that price just traded off from, and there is this rejection week here, which is basically, that rejection week is basically a form of imbalance. So if I measure it like this, so let me just reduce this. Yeah, to a minimal so it gets out of the way. And so I have this. See, from the top of my wick to the bottom, quarter ruler. So I want to see price trade up to these zones. You see? Okay. So this will be weak. So my weak encroachment is at 98 for 92. So the price might alternatively, might continue down if it closes below the Friday's low. If it closes higher than this low, it will go up to, I expect it to go probably all the way to, expect it to trade all the way to the consequent, or let me just, above that consequent encroachment week. See, trade up to that consequent encroachment week, back into the daily order block before plummeting, taking out the August monthly lows, and then it creates, now from the August monthly lows, we'll look at it as taking out previous session lows, but we have already taken the previous session lows here, and the previous session lows, previous weekly lows, we took them. So yeah, let's clean up the chart a little bit. So if this is the daily range, 98,227, 98, 97, 736, that is the daily range. We'll go to the 4H. So from the previous daily range, you can see this clearly. That is the daily range on premium and discount. But I want you to look at something. This here was liquidity taken, right? Yeah, this was liquidity taken here. When the liquidity was taken, this might act as a CASD. And look at where the weekly consequent encroachment is at. If you're supposed to pull a fib, if we were, okay, not supposed, if we were to pull a fib from the top of that range to the bottom of that range, do you see the weekly consequent encroachment is directly 98,493? That is like the what percent level? 98 for that is the 79% level. The 79% level fib level is 98,493. The week consequent encroachment is 98,492. So from this premise, we can tell that price is definitely going to try and reach these zones. So as I said, you're going to see price want to trade up to these zones before coming back and taking the monthly lows and finally going up. So that is like the higher outlook of DXY. So from that you can see, let me just zoom in a little bit here. From here we can see our checks. Previous daily lows are taken. The initial sweep is taken. This is the initial sweep is faded. Then we want to see an SMT. After the initial sweep is faded, we want to see the SMT and then the CASD. So from the 4 hour on the DXY, you're going to look for opportunities once CASD has been met and there is SMT. Yeah, so you're going to be buying from these levels, targeting these levels here. So basically, your range should be something like this, because we expect tomorrow, because on Fridays NFP we expect Monday to be tradable. That is like around a 2.99 stop with 20 pips. If you bought around where price is, yeah, around 17. So yeah, this is what you should expect. Think something like this up to the 79, where there is the weak consequent encroachment, and then from there you probably sell back. Yeah, probably sell back to previous monthly lows. And thank you, that is my outlook there. So that is how what I'm thinking of the dollar as we move into a new month. Good luck and good